Q&A. Question goes, thoughts on real estate investing versus putting my money in the stock market. When we first started our journey in terms of trying to achieve FIRE, we did both. However, we actually had enough capital to do both. We went through the route of three things. So in the beginning phase, we just saved. So with both of us working full time, we have no kids back then, and with our income, one income is for, saving, building up our nest egg, let's say, and the other income is going up for all the expenses when it comes to living costs, all of the admin costs such as groceries, bills. So that's how we did it in the beginning. Then once we had enough capital, we actually went and purchased investment property with the lowest amount of cash we can get, and using the negatively gearing strategy, where it's costing us money in the beginning, with the hope that the rent is actually going to cover the admin costs, and possibly in the future it would be able to get drawn down on the equity and purchase another one. So that was the strategy that we use. So buy one, hopefully the rental income can cover all of the administration costs, in terms of our bills as well as the mortgage. The value goes up, rent goes up, take out the equity and repeat the process over and over again. So that was the idea of it. And then at a certain point, we dabbled into day trading. At the time when we started our journey in terms of trying to be financially free, we were able to accumulate, I think, about 4 to 5 property or so, somewhere around there. At a certain point, we were capped out from, from the bank, and we were unable to purchase any more property. So, and due to our serviceability, because obviously all of the investment that we had, it was actually costing us money week in, week out. So that wasn't a lot of fun at all when we did that property route. Now the downside of the property, on the other hand, was the fact that I have all of this and it's not as liquid. You gotta wait for about 3 to 6 months. You gotta market the property if you want to sell it. You gotta talk to an agent, have multiple different agents, work with them, work with the buyer, make sure that what they're asking is actually realistic. So you get a lot of people trying to lowball you in a sense when you sell a property, trying to get you at a discount as well. So in that aspect of it, there's a lot of administration costs when it comes to property. We did day trading in the same time. Unfortunately, I'm not a good day trader. I think we lost overall we lost all of our capital in the day trader, because we weren't really good at when it comes to day trading, full stop, because you got to work with your emotional psychology and whatnot, and not going through the fear and greed and the fear of missing out as well. So we did that. Then the next stage after that, realizing that, hey, property is actually the way to go. And we're really fun about it because, yes, it's costing us money. However, the value of our property has skyrocketed. But at a certain point, there's actually a little bit of a trigger point as well. There was a few headache that comes with a property, and realizing that this is probably not the way for us, because one, again, the administration costs, it got bogged us down in terms of, real estate agent, as well as the bank, juggling between one and the other, as well as wear and tear on the property. And if there's a problem to the property, you got to rectify it, so that way there will be a tenant in there. The worst one we ever had was actually somebody burnt our home. And that wasn't a lot of fun when that happened. The repair cost on that, how long did it take us? It was quite a long time for us to do that. So that was the biggest headache that we ever had. the normal wear and tear. Let's say tenant move out and leave a mess. It was in a rough part of the neighborhood, let's say. There's a lot of those. We did, I think on an average year, we did like a renovation on it. Repair the bathroom, repair the kitchen, repair the walls. There's a lot of those repairs involved because it is in a rough part of the neighborhood. However, that's because that's actually the cheapest that we can actually get in that at that particular stage of life. We ended up, because of those, a lot of headaches, and I guess we did have a couple of units as well, apartments. And in that aspect of it, let's say the strata, it's just going to go up and up. It's just non-stop in terms of administration. I feel like everyone else is getting paid except for ourselves. So there's this thing called delayed gratification. I understand it, but I feel like every week it's like there's always a repair needs to be done, or there's always a bill that needs to be done. So we have all of the money going in, money going out, but nothing stays in our bank account. So just in and out. Sometimes even worse. Money goes in from the rental, goes out for all of the, companies out there. And in fact, it's costing us a lot more. And I still need to fork out an extra, whatever it is, on top just to service the property. So from then on, I realized that property not for us. We ended up liquidating all of our assets except for 2 now. So we liquidate them all. Luckily, on the other hand, the market has been quite good for us. We were able to generate profit from selling all of our property, and then from there we were able to put money in the ETF, exchange traded fund, in index fund or so. So what I found that after going through those 3 processes throughout my years of learning and trying to understand how money works and investing, realizing that ETF is probably the most simplest part of investing. It is simple, it is boring, it's less administration cost involved, and less headache, and I don't have to, so in real estate, you have to speak with a lot of agents and tradies as well as the bank. There's a lot of, if you pay your bills late, you're going to have late fees. There's all of those little things happening. Whereas in ETF, on a click of a button on a phone, you should be able to figure out what is your current asset value, and if you want to liquidate, and if you want to put some more, if you want to do nothing about it, it's right there. Whereas in a property, if I wanted to sell something, it's taking us roughly about 3 months or so, 2 or 3 months, just to get it sold at the correct price that I actually wanted. So like, you have to speak with an agent, you have to then advertise them, you gotta have an open home. If you have a tenant in the house or in your property, you gotta make sure that they're okay, that we're doing an open inspection. So there's all of those little things involved with property. Day trading, hey, click of a finger, click, you end up either losing money or you're making a lot of money. So fortunately, we went on the lots of losing streak. So that's not fun. And then on the ETF, on the other hand, on a phone, on a mobile app, we can see what is our current position. Do you want to buy more? Do you want to sell some? Do you want to not do anything? And that's what you can do as well. So yeah, that's the route that we went through. So if you are thinking of buying both, understand that there will be a headache. There's a lot of learning curve, especially for you who haven't actually purchased a property before. But if you want to do the laziest way, I guess the most boring, the most simplest thing there is that I've found so far is actually going in the ETF. On a property as well, there's a lot of leverage in that aspect. So you're borrowing money, let's say 5, 10, 20% down of your own money, and then you're borrowing the rest of them from the bank. So that would mean, let's say if you put 20% down on your property, you're leveraging 80% of that. So it would also mean when you leverage that amount, there's a lot of risk involved. There's also profit sharing. When there's rental coming in, a bulk of that goes to other people compared to your own pocket. So Whereas on the ETF, I don't leverage. I just use my own cash and whatever is available fund that I have, I don't leverage. And from there alone, it's like, okay, then is my money working more or is it not? So, and then every quarter or so, we actually get a big chunk of dividends, let's say. And on top of that, there's less administration costs. And if you want, let's assume that you have something happen throughout your life that you require capital, within a few days, you should be able to liquidate your asset when it comes to ETF. On a property, on the other hand, it might take you a month or two. So as an emergency, you can just click, done. And for me, I found it's less stressful. When you wake up, you can just check it out. Okay, this is what my net position is currently. Whereas property, the only way that is worth value if somebody willing offer you whatever that is. For example, I had a few houses down the road in here that's been trying to selling for the past 2 years. And they haven't got the price that they wanted, and because of that, it takes a while for them to liquidate their asset. It's been about 2 years or so, whereas in ETF, 2 or 3 days, maybe in a week, worst case scenario, if there's lots of public holidays in a row. So, but yeah, that's just my 2 cents. Which route that you should go to, it all depending on you. Like if you really like the hustling and bustling of real estate, then go to that. If you like having that take the risk, go to do that. If you, for me, it's better than just sitting on the sideline. That's what I found. It's better than just, contemplating and just talking about it. Way much better if you actually physically do it. And then the other one would be, I guess, the other difference is with the property, you're only having one dwelling. Let's say this house, if I buy on a mortgage, let's say, a typical investor coming in, buying them 80%, borrowing from the bank, 20% of my hurt money, and then after that, you got to pay it off over, say, 30 years or so if you're lucky, or if not, a lot more shorter than that. There's that one option. And then there's the option of with an ETF where you actually have hundreds or thousands of different companies that you are holding. The minimum of that is actually going to zero. It's very unlikely, let's say, or very slim. There is still chance, but it's a lot less compared to, let's say, if this house is burnt down, we don't have a tenant and we don't have insurance, let's assume that then there would be costs hundreds of thousands of dollars to get it repaired, to earn an income from it. ETFs, on the other hand, if a company is not performing, I could just sell that little portion of it and then move on to whatever product that I think I fancy. Anyway, that's just my 2 cents. If you're thinking of investing on ETF or real estate, coming from my own personal experience, I don't know if this is going to be any helpful for anyone out there, but if it does, be sure to do thumbs up, subscribe if you can, and if not, write a comment. That'd be muchly appreciated. Bye.